when they turn the printers back on again, or more. Yeah, exactly. And again, there's a mathematical equation involved in this. It's that law of compounding interest. And how things grow exponentially at the end. And so there will come a time again where the Fed will revert back to this. And there will come a time again where the next QE program gets turned on, and it's going to be 50% larger than the last one or whatever. And that will be the time when even in this current pricing scheme, rational human beings and hedge fund managers and everybody else are going, yep, got to get some gold.
Welcome to Gold Silver Pros, where you'll learn the ins and outs of the gold and silver markets. Searching for the best precious metals deal? Our affiliates are of the utmost trust, quality, and highest customer service in the industry. Shop with our trusted partner, 𝙂𝙀𝙊𝙍. Access special deals on silver, gold, and platinum through our website or call 307-264-9441.
Hey everybody, this is Rob Kientz of 𝙂𝙊𝙍𝙀𝙍.com. I put together a special roundtable of my friends in the gold and silver industry. We're joined by my good friend Chris Marcus of Arcadia Economics, Craig Hemke of TF Metals, and the veteran of the group, Dave Kranzler of Investment Research Dynamics. How are you guys doing this morning?
It's a nice way to say I'm the old man in the group.
I didn't use those terms, Dave.
Yeah, but it's what's implied if you read between the lines.
Yeah. Well, since you're the oldest, let's have you go first.
I'm in the acceptance of turning 60 next month.
Are you really?
That's why you've got the biggest silver coin behind you.
Wow. Okay. So is this all the silver you built up, and did you have it melted into like a giant Chinese panda, colorized panda?
I wish. It'd be nice to have a colorized silver panda that size.
It reminds me of watching like Turner Classic Movies, and you see the old Casablanca, but they've colorized it now.
I don't like to. I like it in black and white.
I do too. All right, so we're here to talk about the markets, and the reason I called you guys together because I trust your viewpoint, and it seems to me like there's a lot of confusion. It's why isn't gold and silver up? Why is there such apathy? Why does everything seem to be sort of crashing around the world, and why all the negative news? And I'm trying to make sense of it, and I wanted your guys' help, honestly. So Dave, I'll start off with you, since you are, the veteran of the group and the wise old sage.
The maven.
What's your view? What's going on? I mean, talk me off the ledge. Why shouldn't I be selling my gold and silver right now?
I mean, what's your
that was freaking convincing, Dave.
Honestly, I don't have people asking me that question because I don't know. Well, depends on what gold and silver you're talking about. If you own GLD, I would sell it and I would buy physical gold, or you buy physical silver with it. So part of the problem is what most people are talking about when they're talking about gold and silver are the prices they observe either on Kitco or the websites that reference the Kitco price of gold and silver, or like I watch the gold and silver futures all day long, and that's the paper market. The Kitco price is actually, the way it's derived is it takes the latest London price fix for gold and silver, and then it implies a real-time price for physical gold and silver using a formula that is derived from the LBMA forward market, the forward curve, and the COMEX futures curve. So it's not even really a spot price either. So what people are talking about when they get upset, and I get upset too when I see gold and silver bouncing around like a heart patient on a heart monitor on amphetamines, is they're talking about the paper market. So and it for long periods of time since I've been involved in the sector, the last 21 years, there's long periods of time where the paper market is the tail wagging the dog on the physical market. And then there's certain periods where the physical market starts to take over, and it makes it hard to push around the price of gold and silver using derivatives, using paper. So I think that period of time where they're able to manage the price of gold and silver using derivatives, I think that's starting to wind down a little bit, and I think we're going to see there's going to be pressure from beneath the mirage of paper gold and silver. There's going to be pressure from the physical market that starts to push it higher. So, I mean, when you see, so let's just take last night, for example. At the turn of midnight New York time, gold was up at 1796, and this is the December futures basis. And most people woke up and they saw, oh no, Kitco shows gold at 1774. It's down $22 from when I went to bed. And no, that's there wasn't like actual physical gold being sold that pushed the price down. This was all in the paper market. So I think people need to kind of differentiate why they might be buying mining stocks, which has a speculative, hey, I'm looking for a high rate of return on my investment element to it. And why you would buy gold and silver, specifically physical gold and silver. You're buying physical gold and silver as a hedge against, all the bad news and that's out there, and all the mistakes governments and central banks are doing in managing the system. So, and that, I don't know anyone who could look at what's going on right now and say, hey, the guys leading us are doing a great job. In fact, with all the data that I look at, we're going into a deep depression. Like, I think what's going to hit us is going to be worse than 2008. And will the price of gold and silver go down temporarily from where it is now when the markets start to collapse again? Yeah, they might, but at some point they're going to go a lot higher, and it's going to be coming from the physical market.
So Chris, you and I have had a bunch of conversations about where we are in silver lately. So I want to kind of ask you a sentiment or a conviction question. From your standpoint, I know you've been leading the way for silver for a long time. I certainly have developed a big following, and for obvious reasons. Do you still feel the same sentiment towards silver in terms of, are you still there in thinking that market eventually is going to reach some level of sanity and people will be rewarded for believing in it? Has this shaken you any at all? Has it caused you to reevaluate your stance on that? Or how do you feel about the silver market now, having been in it for so long and seeing what's going on now?
Well, it's a good question, and certainly I've been reevaluating certain things, because one of the main reasons we were looking to silver is because of the inflation concern, and now we're getting the 10%, 9% CPI and PPI prints, and because the Fed's raising interest rates, we've seen the paper silver price get clobbered. Perhaps it's made me reevaluate my timeline and really the role of silver, where once you hit really a break point in some of the things that are going on, perhaps that's when silver really does play its role. I mean, we've seen gold hang in there. It's still not far off the all-time highs, not too far off of $2,000 an ounce. Yet when you look at what's going on in the world, I think people see that there's bad news out there, and you have things going on in Russia and Ukraine, and for a while they had that temporary gold backing, yet it goes away for a while and life carries on. Similar, the Fed's raising interest rates and we haven't had an overt meltdown. I'm surprised to see the stock market, even mortgage rates are coming in as the Fed's raising 75 basis points at a hike, and it seems like so far it hasn't made a dent in the stock market, or it did for a little while, and then the stock market just keeps climbing. So I think that's the culture that we live in, where as long as the stock market's going up, most people think things are normal. I agree with Dave and I think Craig as well, where you have some things building beneath the surface. Even with rates are now, it's still quite a bit below the inflation rate, and it's hard to imagine continued significant interest rate hikes to a 9 or 10% level. I don't think they have any intention of going there. yet do rates get to 3.5%, 4%, and if things start getting a little bit rocky, they just pause, and then we're waiting to see how that shakes out. So I guess I've short answer after all that. I see things could drag out longer than expected. It doesn't seem like a stable financial situation, and in the end, governments are still spending a lot of money, borrowing's going up, Fed's pausing, but there's still that elephant in the room that I guess is what drew me into silver initially. I'm surprised that, here after a decade of all this, decade plus, that we're still sitting here with $20 silver. But I wonder if perhaps it's the type of thing where you need an overt crash before most people change their thinking on how these things play out.
I think that's entirely possible. And I think people will rotate out of other stuff into silver when that becomes more apparent. I think you've got something there. And it just seems, Craig, like everything can go crazy before that, and you're waiting on the other shoe to drop, and the precious metals market's not coming. What's your view on that? I mean, we had a bunch of news, and we're not seeing the movement in the precious metals. What do you think, Craig? Where do we get to some sanity? Are we living in a sane world? Are we living in an insane world? What's going on?
Well, as long as we're in this current pricing scheme that is held now for 40, 50, 45 years, there's going to be certain things that make the metals, the COMEX futures go up, and certain things that make them go down. And we're in this period where there's just not a lot of interest in buying those futures contracts because the dollar's been soaring. The dollar's gone up, what, 15, 16% in the last year, right? All while the Fed has been job owning higher interest rates, and inflation expectations haven't gone up, even though the rate of inflation has gone up. And so the computers that buy and sell the futures contracts just haven't done much, have not gotten excited about owning the precious metal, which is all part of, I mean, Dave writes about this a lot. I know it's like the Commitment of Traders report. You got these hedge funds that as of a couple of weeks ago were net short something like 18,000 silver contracts. And so, from watching the markets, that's eventually going to develop into a squeeze, and it did. And we went from 18 to almost 21, but there's been no catalyst to drive it any further. I'm somewhat frustrated with myself at this point because I almost feel like I tried to speak something into existence at a faster rate than what my experience should have taught me. And that entering this year, and I wrote about this in my forecast in January, you could see the higher rates coming, and you figured that first 4 to 6 months of the year was going to be tough, and that the stock market would probably crash, and it did. I mean, it went down 20 some odd percent at the peak, but I thought maybe the Fed would respond quicker and pivot, kind of like they did in 2018, in that fourth quarter 18 when the stock market crashed, and we had that Powell pivot then. And what I forgot about was the 4 years plus leading up to that, we had to kind of wander in the desert. I mean, it was just brutal, with gold between about 1050 and 1250, from 14 through 18, while the Fed played these rhetorical games about, quantitative tightening, and we're going to let rates normalize, and our balance sheet's going to normalize. And when they did like $700 billion, they allegedly ran off their balance sheet before the thing finally all broke, and the 10-year note got to 3.25, and the stock market collapsed. And then you forgot this pivot. And I guess what I neglected, and again, this is where I'm a little frustrated with myself that I didn't draw on that experience and think about how long of a time that was that they were able to bullshit everybody, and before it finally broke. And I guess I feel guilty and foolish that I thought it would be faster this time. But even here they are still playing these rhetorical games. Oh yeah, they run out some, any Fed goon that sees an open microphone is going to grab it, and they're going to tell you about how they want, the neutral rate is 4% and all this other bullshit. And the market continues to kind of let them get away with it, and nobody's buying gold or anything like that. And they're just buying any dips and crazy, meme stocks and stuff like that. At the end of the day, to get back to your original question today, and I don't want to go on, forever and monopolize the mic, but this is analogous to these other periods. Dave mentioned a shitty economy and the financial crisis. And so what happened? You got QE1 and QE2 and QE3. And each of those programs were larger in size because the deficit and the debt, is growing exponentially too. And so the programs have to grow in size. And then what this last one was, what, $4 trillion? So what's the next one going to be? 6? When they turn the printers back on again or more. Yeah, exactly. And again, there's a mathematical equation involved in this. It's that law of compounding interest. And how things grow exponentially at the end. And so there will come a time again where the Fed will revert back to this. And there will come a time again where the next QE program gets turned on and it's going to be 50% larger than the last one or whatever. And that will be the time when even in this current pricing scheme, rational human beings and hedge fund managers and everybody else are going, yep, got to get some gold. And just like in these previous 3 or 4 times when they had to admit what was going on in reverse course, gold's going to soar, whether it's 30% like it did in 2010 and 2016 and again in 2019, or whether it's 50, 60% like it did in 2020. It's going to happen again. So coming all the way back around to your initial question you asked, Dave, why would you hold on? Well, because I don't know when it's going to start, and it's obviously taking longer than I thought, but it's kind of going to happen again. It's not like we're going back to $1 trillion balance sheet, and where we were in pre-financial crisis. And this is the new normal, and there's a cycle to all this. And now, since none of us probably sold out, in March or again in April, and now we're all just kind of stuck waiting for it to happen again. And in the meantime, that's just frustrating as hell to watch on a daily basis.
I think we all look at fundamentals and technicals. It's what we do. We're all analysts to a degree. And certainly fundamentals and technicals are telling us we expect to see something. But I want to suggest maybe a more humanistic approach to the problem. There's a phrase from Arthur Schopenhauer. It says that all truth passes through 3 stages. First, it's ridiculed. Second, is violently opposed. And third is accepted as being self-evident. I suppose if we're just looking at this from a human action perspective, because markets are human-based, even though we have the computers, at the end of the day, the market is still human-based, especially when you're talking about the masses.
Yeah.
Maybe we're in the stage at which it's opposed because people don't want to accept the fact that whatever the system we have now is in its final stages. And so therefore, because that truth is not accepted, people aren't accepting the alternative, which is going back to the metals. I suppose that may have something to do with it. Anybody have thoughts on that at all?
You made me think of the COVID shots when you told me from whoever that dude is, right?
Yeah.
You're ridiculed and then violently opposed and all that kind of stuff, and then grudging acceptance. But no, I suppose that's probably a good way to look at it.
Rob, I think you're right, because there's a degree to which I think people are starting to sense something is off. I think people are noticing the inflation. I think that has caught the public's attention, yet it's like, well, what do we do, or where do we go? And I think most people around the globe are a little confused by that. Obviously, there's the subset of people like us that look at the money printing, and to me, my introduction was after living through the housing bubble, finding that the only people who saw that in advance were all talking about gold and silver, Austrian economics, and the money cycle. I don't think most people are looking at it like that. And, there's a debate of whether the Fed has it under control. I think most people think that they do. And perhaps that takes a couple more years than I would imagine. And like Craig said, there's the degree to which sometimes things seem so wild out there, you assume it's going to happen more quickly, yet I think there's also on that other hand, we're in it every day and seeing these things, whereas it might take a lot longer for other people to come to that same conclusion. And
I'm sorry to interrupt. I suppose we should just kind of be talking over each other anyway, so we all kind of, it's a round table, right? I remember it was a week ago, maybe a week ago today. I had lunch with my 91-year-old godmother aunt, right? 91, sharp as hell. She's not your normal 91-year-old. She'll cut your grass, all that kind of stuff. And I was with my brother and my sister, and we're all having lunch. And I'm just talking to my aunt. I hadn't seen her in a year probably. And we're talking. She goes, "Oh yeah, this inflation in my stock market. I got to get the stock market back up." And that kind of started the conversation. And without me even bringing it up, she said, "Is it? I thought the dollar was backed by gold." Now,
Wow.
she is a smart lady. Okay. She's not like, somebody that hadn't been paying attention for the last 50 years. She goes, but it's not, is it? And I said, sorry. It hasn't been for 50 years. It was 1971. And she goes, so really, the dollar really isn't backed by anything? So, I mean, I know the four of us sitting here, we know this is true. We know that 99.8% of the people in the world don't understand how the monetary system operates because they don't care. They're not smart enough, or just it's not on their radar. They got too many other things they're worried about. But I still kind of feel like we kind of take for granted that everybody that we know knows this, right? And so that's got to be kind of a part of it too. I mean, what Chris was saying is what got me thinking about retelling this story, because you sense we know how effed up everything is, right? And we know all this stuff because this is what we do. This is, our passion and what we do for a living. But we just can't take for granted the size and the scope of the population that has no freaking idea. And that has something to do with it too.
I think there's even some people that have an idea, but I remember this was back before I left Wall Street, ran into someone on the train home that I'd gone to college with, and we were talking about gold and silver. And he kind of looked at me like, yeah, I guess so. I just hope it's going to be okay. And things were good then. And it's like, I can understand that.
Yeah.
And I don't know, I guess you could say we've been sitting here worrying about something for 10 years. But again, I look back similar to how people were looking at housing prior to the bubble. I mean, housing's going up and people are making money, and understandably. And that's why I wonder if it takes really an undressing of the markets before that really changes in a bigger way.
Yeah. Reach that point of critical mass.
I throw something in here. I think the people that most people think are responsible for the economy, and people say the president's responsible. Obviously, no, the president doesn't,
especially this one.
People look at the president, they look at the Fed president. I think people, and it kind of goes back to that hero genre. People are looking for one person to give them answers. They're looking for Batman, they're looking for Superman, they're looking for Captain Marvel. Yeah, they're looking for Zeus. And in reality, some of those people in those positions around the world aren't necessarily providing the full truth, whether they know it or not. And I think that if you're the average person, is a go-lucky person, believes in America, July 4th parades and all that good stuff, you're believing what the powers that be tell you, and the Fed's telling y'all we're okay. We got it under control. And the Secretary of Treasury saying it's okay. And the mainstream media is saying, oh, we're going to bounce back. It's okay. They bring on all their experts and say, we're going to bounce back. And it's like a big groupthink episode.
Yeah.
When does that break, Dave? When do you think, in your experience, when does this kind of stuff change? Like, is there going to be a catalyst, or are people just going to wake up one day and say, okay, wait, this is all fake. We're living in the Truman Show.
Well, I mean, there's actually a lot to unpack there, because I think part of the problem is, and the reason why these guys can get away with what they get away with for as long as they do is it's just natural for humans to use denial as a defense mechanism and to have hope, especially if you have kids. I mean, and if you throw in the towel and say, okay, I got to buy gold to protect myself, the reason you're doing that is because you see bad things coming down the road, and you don't want to sit there and consider that possibility for your kids, right? And so I think there's, in part, that. I got to tell you, I think we all agree that most of what comes out of the Fed heads' mouths is blowing smoke up our ass. But I got to tell you, the fact that across the board on the FOMC committee, they are all resolute about saying, we're going to keep hiking rates until the rate of inflation gets down to 2% on a sustained basis. So to me, again, unless they're blowing smoke, to me, we're not going to see a pivot in November, because it's going to take longer than that for the phony rate of inflation is measured by the government to come down. So and I don't know if we're going to see the masses pile into physical gold and silver. You know, most of them aren't even aware that it's an option. You know, or their investment advisor will put them into GLD. Yeah, you got gold, you got 1,000 shares of GLD or whatever. That's not the same thing. So, but it's not at that point where people, you know, there's going to be a certain percentage of people that realize that, you know, the Fed is full of shit, the government's full of shit, we're in a lot of trouble. And it won't take a large percentage. I mean, look at the French Revolution. It was like, what, 1 to 2% of the French population is what was involved in that. They were able to overthrow the government. So, you know, if you had even just 5% of the populace say, okay, I got to start buying, I got to start converting as much as I can into physical gold and silver, you're going to see an upward explosion in the price. And the paper, they won't be able to control it with the paper market.
Right.
You know, and that's what we saw. I mean, we saw that in a lesser scale between 2005 and 2006, and then, you know, mid 2006, and then again from the fall of 2008 until essentially the fall of 2011. You know, and that wasn't just the futures and short covering that drove the price higher. There was a lot of physical demand back then, and there was shortages of silver eagles. I'm sure, Craig, you probably remember that.
Oh yeah.
So, and we're going to see that again. So
what do you think, Dave?
I think it could happen within the next year, if not sooner.
Well, what do you think, Dave? As we're recording this, we just had the July FOMC minutes come out about an hour ago. It confirms a lot of whatever. But when the metals took off after that 3 weeks ago, it was when in like 10 seconds in Powell's press conference, and he said two things. He mentioned the data dependency, that, you know, we don't have a set plan now, we're going to be data dependent. But he also said in the past tense, he said, we have moved to the neutral rate, or expeditiously to the neutral rate. He didn't say we are moving toward it. He said we have moved. Now, maybe, you know, he's an old guy, maybe he's fucked up and he just spoke, you know, he used the past tense and he didn't mean to, but that's what he said. And that's, to me, that was the first sign of that pivot. And Dave, I guess my question, what do you think of this idea that I have, you know, is that, you know, the Fed pivoted in 18 after 4 years of their nonsense, and the stock market had fallen 20%. It was dumping into Christmas in 2018. And they had that well-documented meeting of the working group on financial markets on Christmas Eve. And then the Dow on the 26th, after being closed for Christmas Day, went up 1,000 points. Yeah. But the pivot had been made, right? And that's why the stock market reacted. Now, going into 19, you still had, you know, 𝙎𝙂𝙇𝙀𝙊𝙍 at Goldman Sachs and the rest talking about 5% on the 10-year treasury, and they're all dead wrong. We never got there. And the Fed may have still been playing some rhetorical games, but it took 6 months from that actual first hint of a pivot to then the actual policy change. Can you see that kind of, and again, it's going to depend on economic data and all that kind of stuff. But if this was the first hint of pivot in July, you know, that put us on a pace for something like January or February in the first quarter. And that's kind of what the Eurodollar market is indicating as well, you know, is that the first rate cut, and if Fed funds futures are showing a first rate cut, maybe in the first quarter. I mean, those dots kind of connect, because if I'm seeing that correctly, then there's a trade here. You know, we might sit here and, you know, pull our hair out and have, you know, kind of frustrating banging back and forth in a range, you know, through the end of the year. But then, man, if that pivot is actually coming, then I would think that sets us up, you know, for a pretty good first half of 23. I don't know. I'm just trying to make sense of it all. You know, you try to connect the dots. What do you think?
I mean, I think it depends on how serious they are about attacking inflation. I mean, you haven't really had any reduction in the Fed's balance sheet yet, right? I mean, it's come down 80 billion since the peak. I mean, it's not meaningful.
Yeah.
And you know, when he said, you know, 2.5% was the neutral rate, that was perplexing. I don't know if that was scripted and he was reading it off the teleprompter, or if he was going ad hoc.
I was watching him. It was in
I
response
don't
to a question.
understand how, you know, I mean, even if you just use the phony government inflation rate of, you
Oh,
know,
Dave, you're not questioning our government again, are you?
eight,
Come on,
it's
Dave.
just
Such
say
a
8%
conspiracy theorist,
year over
Dave.
year, right? So, I mean, the neutral interest rate would be 8%, right?
Right.
Because that then you don't have negative real rates.
Right.
So,
But that's what he said. I watched him. I was sitting
I
on an
like
airplane.
I saw it and I
Yeah.
had to watch it a few times and I was just
Yeah.
I don't understand what he meant by that. I don't think anyone does, and no one asked him about it.
No, there are no follow
I
up.
mean, you know, excuse me, hey Jerome, what do you mean by the neutral rate when you say 2.5% Fed
Yeah.
funds rate is neutral? Because I know the rate of inflation is running, you know, at the time it was 9%,
Yeah.
the way the government measures
Yeah.
it. So,
Yep.
so, you know, and that's where these again, it gets back to how artificial the paper markets are.